Hi everyone, today let's talk about the jobs data, then we'll look at the economic calendar, as well as Max Payne, then we'll go over the charts, then we'll go over my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the big news for today was the ADP non-farms. They came in huge at 497,000 for June, which is interesting. Most of that was in leisure and hospitality, some in trade, as well as transportation and utilities. This is a pretty significant jump in payrolls, and this comes right on the back of the Fed saying that they want the economy to slow down and weaken, and citing the jobs market as an illustrator that the economy is still quite strong. Annual pay rose 6.4%, which was quite high. It continues to slow, but it's still very high, just like core CPI. Overall, this is not what we want to see. This would have been a case where bad news would have been good news, and this much better news was not good for markets. Moving over to this chart by game of trades, they highlight that U.S. manufacturing PMI declines when unemployment rises, and we've seen U.S. manufacturing PMI coming down quite substantially, but we have not seen that increase in the unemployment rate quite yet. Similar to what we saw here in 2008, it was continuing to roll down. Right here, you can see unemployment rate had not risen yet. And then as this continued to crater, you see that unemployment rate jump much higher. And you see that two more iterations here. Unemployment rising, services PMI going down, and one more here as well. And what they're alluding to is that unemployment is going to tick up here steadily until we see a pretty decent spike. And we see services, manufacturing PMI hit a much lower low, which should indicate the bottom of the recession, which has not even really started yet. Moving over to the economic calendar, you can see that ADP non-farms very high. S&P Global Composite PMI was actually positive at 53.2. Services PMI also positive. Non-manufacturing employment positive. So pretty good indicators on economic factors at the 10 o'clock point. JOLTS report lower than expectations for May, and then Fed balance sheet offloading just around $40 billion, continuing to offload there. And then looking at tomorrow, we have average hourly wages, actual non-farms here expected to be 225. I would expect that to be higher. And then the actual unemployment rate here at 3.7. If this steps up here tomorrow, just like the previous chart, if this steps up, that could be a pretty big indicator that the recession is going to come eventually. The Fed says Q4, but the earnings recession could be starting here in Q3. Definitely interesting to see that unemployment rate here tomorrow at 8:30. Moving over to Max Payne, we're basically right on top of it now, 439.50. Max Payne is 439. Right here at that dip low, 439, between these two put peaks. I could see this rally a little bit, maybe up to 441, 442. That could be possible. Put call ratio still at 2. Tons of puts in the market. Most of those are much lower than current prices. High level 448. Obviously don't think we're going to get above that level. We've called that as the high for a while for this week. Again, I think we'll probably hang out in this zone. Could go as low as 435, but probably not too much higher than 442. Moving over to the charts, starting off with the S&Ps here on the 1 hour and the daily chart. You can see we fell off a cliff, hit the 200 SMA here on the hourly chart, bounced a little bit up to VWAP and the 9 EMA on the hourly. Certainly could hold that level as a potential higher low setup going into tomorrow's session. Momentum turned bearish on the daily chart after a brief moment of some bullishness. Volume increasing on the day as RSI and momentum move lower. Generally not what you would want to see, but it certainly could bounce from this area similar to what we saw here previously. We did get into that zone, and the longer term trend has not turned quite yet. Want to see this get above 339.98, hold above there, and then continue higher back up into this previous zone if we are going to go higher. But at this point, I would expect to hold right in this zone, just like we talked about on Max Payne. Moving over to the NASDAQ here on the hour and the daily. Similar thesis, big move down, touched my level here at 364.84, bounced from that level, hit the next resistance, pulled back a little bit from there. If this rejects more fully from here and we start to break this next level, that's going to look quite bearish. It's going to be a high, lower high setup, just like on the SPY. Daily chart still looking okay. Trend still intact, momentum bearish, RSI looking weak, volume stepping up on bearish price action over the last 2 days. So very similar thesis. Longer time frames still holding potentially bullish. Shorter time frames definitely showing some weakness here, but should hold going into the max pain event for tomorrow. Moving over to the Russell and the Dow. Russell showing similar weakness, gap down, fell, hit the 144 EMA on the daily, rallied up into this mid-range. At this point, it definitely looks like a double top, but we haven't taken out the midpoint yet. If this does happen, this is going to sell off really dramatically for probably at least 10 points down to these previous lows. Momentum, bearish, RSI, looking weak, volume stepping up. Everything looks bad here on the Russell, although you do have to acknowledge this longer wick at the end of the day. Moving over to the Dow, similar thesis. Gap down, fell. Did hold 339.11 though, which is interesting. That could be a higher low versus this previous low, which is a little bit stronger than what we had been seeing. If this holds here and rallies up tomorrow, could be interesting, but this does look like an island reversal at resistance at this point. Moving over to the equal weighted S&Ps, I just wanted to highlight this for a minute because it does look like a double top as well. More similar to the Dow, and it is holding up better than the regular S&Ps, and definitely better than the Russell, but it is still looking like an island reversal off of resistance, and it does look quite weak. Moving over to Apple and Tesla. Apple gapped down through a wick and then started to rally back up to the trend line. If it rejects from here, that could be quite weak, but it could certainly look just like this move that we had here in mid-June where we pulled back, had a big continuation, retested, and then rallied much, much higher. And we could certainly get that once again. Momentum moving towards bullish. RSI did touch the 50 line and is holding above there. Looks okay, but a little bit weaker here than it did during this rally. Tesla rolling over a little bit. We did make a slightly higher high than this previous high, but we're right back into that zone here now today. Momentum turning bearish, RSI looking weaker below the SMA. Volume basically the same as the previous day, but it does look like a bit of a consolidation at an interesting level. Moving over to Microsoft and Amazon. Microsoft had a very bullish day coming off of this consolidation of EMAs, pushing back into these previous highs. Still not at all-time highs, and we still have this higher high here. We're not above 344.86, and it certainly could come up here, reject, and then move lower. But this is the strongest mega cap on the day. Amazon gap down, weakness down to the VWAP as well as the 21 EMA. Momentum, bearish, RSI looking weaker here. Volume also quite weak. If this builds on a bearish day tomorrow, that could be quite interesting. But overall, you can see this momentum is starting to fade. Moving over to Staples and Discretionary. Staples fell off of that inside candle, hit the 9 EMA, and it's still holding in the zone. Momentum slightly weaker, holding that 74 level. Not much change from yesterday, still consolidating in this area. Discretionary, on the other hand, gapped down and looks much, much weaker. Momentum, bearish, RSI moving lower. Clear divergence between this previous high and the higher prices that we saw on this island reversal. And it does look much weaker going into tomorrow's session. Moving over to the weaker sectors for the day, we have utilities. It had 4 really strong days in a row. Hit resistance here at 76.18, almost to the penny, and then gapped down and went much lower just like everything else. Momentum still bullish. RSI just below the 50 level, certainly could bounce from here, but it is an inside candle and that is weaker. It's also a lower high versus this previous high. XOP breaking down from that 144 EMA. This has been channeling here for a little bit and it still looks okay. Could be setting up a higher low. We did get a slightly higher high versus this consolidation here. Support is at 124.13. If that breaks down here, then you're looking down to 120.57. Certainly interesting, but huge bearish volume and momentum step down pretty dramatically. Moving over to breadth, you can see that gap down, island reversal on both of these charts here now. Still holding above support on both of them, and it could absolutely set up another higher low and then continue higher on both of these. Momentum stepping down, RSI looks weak on both. Clearly at a resistance level that is interesting, and we could see a substantial pullback from here, but recognize that the trend is still intact on both of these charts. Moving over to yields, the 2-year and the 10-year both going much, much higher here today. The 2-year wicked 5%, and it's continuing to go higher. Bullish momentum, bullish RSI, everything looks good for yields to go higher, which should spell lower prices for equities. 10-year breaking above that 4 level, you can see 4.03, wicking these previous highs. Everything on yields are going higher, which is putting some pressure on equities. Moving over to the dollar here, pretty choppy day, got a higher wick, but then we ended up closing much lower. We're below this trend. We could retest and continue lower here, not looking as good as yesterday. At this point, it looks like we're still consolidating in this zone. I thought we might see a bigger push higher, but it's showing some weakness here, which is interesting considering that the yields did go much higher. Overall, neutral on the dollar. You want to see it get above this trend resistance and then hold that level and continue higher if it's going to remain bullish. If you're bearish here, you want to see a retest of this level and a rejection and a push below 102.98. Moving over to JNK and TLT, you can see a huge gap down back to these previous lows. JNK pushing much, much lower, big bearish momentum, big bearish RSI. TLT, big gap down, took out these previous lows. We're back at the low from March. We're back below $100 here on TLT as well. This 200 SMA on the daily chart continues to be very powerful resistance. We're getting pressure back down into these previous lows, and it could absolutely get down to these previous lows from November of last year, which would be a target of around $94. Moving over to the volatility indices, you can see the MOVE index had been coiling, and then we saw that rocket ship up here today on the jobs report. VIX also gapping higher, getting above that 1490 level. Certainly could push up to $18.50 or $20. That would be interesting. Had a consolidation. We held above the 21 EMA, pushed higher here, hit that 55. Bullish momentum, bullish RSI. Everything on the VIX looks like it's going higher, and really on both of these, it looks like these could go higher. Moving over to my accounts, I got obliterated. I was bullish on the day, just a little bit. I wasn't able to make any adjustments to my position, so I just closed everything out and then reassessed later in the day due to work, unfortunately. And that was a pretty bad deal. Markets rallied a little bit into the close. I definitely would have lost less in my main account. IRA probably would have been about the same, but my main account would have done a little bit better. Unfortunately, I did not hold those positions, and I made some pretty bad decisions going into the mid-session. I did try to reestablish here at 182 and 367 on both of these accounts. We'll see how that plays out tomorrow. 365 is the level to watch on the Qs, and then 181 here on the IWM. Either way, again, watching the non-farms as well as the unemployment rate for that direction for the markets. Let me know down in the comment section what you thought of the jobs data and how strong the economy is. How high will yields go based on this new data? And is that going to finally give us a much stronger reversal than we've seen over the past 2 months? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.